Make sure that oh yeah, I do. And so okay, Charlie, good to see you. Charles. So here we go. Welcome everybody to the How to Make Money Trading Stocks webinar that we do every Friday at about 11 o'clock a.m. Pacific time. Normally Mike and Michael join us. We'll see if they do join us today. I got emails from both of them. Now that neither of them said that they were going to not join us, so we'll see if they come along a little bit later. But we're going to continue on. I hope everything is going well for the people in California. I hope the construction plans on your ARC is going on very well. I don't know if you guys are getting more rain out there or not, but we've been watching what's going on, and God, what a mess. Anyway, I want to remind everybody that all the materials we do present are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. Here's Michael's disclaimer. A little bit about my background. Part of the thing, some people know, some people don't know, is I originally enlisted in the Navy and then qualified for a Navy scholarship and went to the University of Texas, where I studied in aerospace engineering. That's what my undergraduate degree's in. And then I flew for about 7 years, wound up flying off the Ranger, and I just saw this past week that the USS Ranger was decommissioned and they were taking it down, oh gosh, somewhere on the Gulf Coast, I think, to be turned into scrap metal. And so spent some good times and bad times on that ship, but she was a beauty, and so it's kind of weird to see part of your past being taken to the scrapyard. Okay, as you all know, I put a very high emphasis on training, and this week we're going to be basically talking about updates to the early warning alert system. Over the past, I would say, 5 to 6 months, we have constructed a very solid core training program that basically will take somebody completely through the active trend trading system. We finished it off a couple of weeks ago with both the solid entry of the TSI tick-up, and in addition to that, then we talked a little bit about conditional orders a couple of weeks ago, and that basically has put the whole thing together for folks. You can find those all of that training if you're a premium active trend trading member. You can find those on our website, and if you have any problems finding those areas on the websites, please give me either give me a call or send me an email and say, hey Dennis, I'm having a challenge finding those. They're basically very easy to find, and I'll flash one of those up a little bit later prior to us concluding today. Matter of fact, I'll just get that up where it's standing by on the other screen. There we go. And so that'll be ready for us here shortly. Okay, this week in the market, what's going on? Yes, the market has moved up to hit new highs. However, is it taking its rest? That's the question I have moving into next week. We've been, talking for several weeks, or well over a month, since the inauguration of Donald Trump on the 20th of January. We've been talking about, okay, how much further will this rally go? What are the historical precedents for what the market may do. And we're at the point where we would anticipate and expect the market to potentially go into pullback mode. But will it be a pull? Well, how significant of a pullback will it be? That's of course the question we ask. And as of right now, because of the strength of the uptrend, we basically have to treat all pullbacks as not necessarily a chance to get short, but a chance to get into a trade to the upside. With the assumption being that as long as we're making higher highs and higher lows, that the uptrend will continue. So this week, new highs, but are we there yet? So the rally in the S&P is still alive, but a rest would be appropriate. NASDAQ actually broke the low of the high day, but it's sitting at support. And then the Russell. The Russell acted the most volatile of each of the three tracking indexes. And it's doing more of a pullback, but it too is pulling back to a level of support. So the question remains the same. If historical norms kick in, will they kick in for a pullback soon? And the counter of that, of course, is the optimism that's just out there. Well, you wouldn't believe there's any optimism depending on which news station you listen to, but the market optimism is definitely out there, and business leaders and that type of stuff with the expectation of lower regulations, fewer regulations, tax breaks on both individuals and corporate that will potentially allow a lot of these multinational corporations to bring some of their earnings back from overseas and get them under the cover of a lower tax rate. And then the expansion of a lot of the manufacturing, potential jobs and that kind of stuff. Now, basically the framework, the foundation has been set for that. However, depending on how quickly Congress will actually, enact a lot of these things, it may be slowed if they do not act in a, in a quick time frame. And as we're all aware, the Congress, the Senate, does not necessarily act in a very quick and fast way. Now, those of you who read Mike Traeger's article this past week about how high is high, Mike still remains in the camp that, when this market finally does get into correction mode, that it's going to be a significant and severe correction. I'm kind of, and we'll get to that where, the direction of the market. I'm not fully in his camp. And for the shorter term, hey, the trend is the trend, and the trend is right now going up. The percentage of stocks above their 20-day moving average, nothing really to report here. We've been working basically in a congestion area for almost since the end of December. The line chart up here is the spiders, which is the stand-in for the S&P. It has turned down, but we're looking at, percentage of stocks above the 20-day moving average in the NYSE has dropped down here to about 57. Of course, this particular indicator becomes interesting when it gets down to this lower level, below the 30 level. The lower, the better. That can trigger that tends to be where the stronger rebounds come from, and we'll see. So right now, the index is just kind of like in a mark time kind of situation. The S&P has just rocketed up higher. The NASDAQ is rocketed up higher. The Russell kind of got into the swing a little bit, but didn't push as high as the other ones. So here's where we're sitting about 9 o'clock this morning. That's Pacific time. As you can see, all of the indexes are, of course, up for the year. Russell, this should be a red number here. The Russell positive for the year, but actually pulled back down below the high that it made last year. And the active trend trading, based on our balance, we're up about 5% for the year. So let's look at the charts. And why do I have? Hold on a second. Let me do one thing here. Here we go. It's a nice picture of Tesla. Had a lot of stocks get whammed this week after earnings. Tesla was one of them. Okay, let's look at the SPX. Okay, the SPX. Let's get rid of these drawings here. Remove all the drawings. Bam, bam. There we go. Everything has been stripped away. Part of the thing that we noticed, just looking at the S&P for the week, 1, TSI on a daily basis has turned over. 2, momentum on a daily chart has turned over. Whilst the TSI on the weekly chart is continuing to push higher, but we're getting some negative divergence here on the weekly chart on momentum. And so we had a hanging man earlier in the week. We had a hanging man here, which followed a bearish harami. And now we're getting basically just not a big drop down, but this is a break of the low of the high day here. And it is still, both the 8-day and the 20-day are still logical levels of potential support, with more significant support down into the 50. If we're in a topping type pattern, what should we look at? Well, one, we should look for a break below the 8, maybe moving all the way to the 20, and then a push back up, and then either equaling this top or maybe slightly below it, and then a push back down. And when it pushes back down the next time, it would, would potentially hammer up against the 50-day moving average, and that's part of the initial signs that the market may be going into a more significant correction. What's the magnitude of potential correction? 2, 3, 4, 5% would be, not be surprising. What we have also going on is, if any of the plans that the new administration has for pushing, the aspect of, trying to get the economy back on track, if any of those go sideways and get pushed out into 2018, such as the revision of the tax plan, if that gets pushed out to 2018, if the repeal and replace of Obamacare gets pushed out into 2018, if the regulatory picture doesn't change, and anyway, anything that would delay the current agenda that has been put out there could in fact negatively impact the indexes, and that could be the catalyst that would put them into a more severe correction. I'm not saying a bearish market, but a healthier correction that would bring us back into some some support levels where we may get a bounce from there. So pay attention to your bounce areas. We basically have a support area here at the 2350 level. We also then have another one down here at the 2300 level, with the moving averages kind of providing interim support for a move down. What's NASDAQ telling us? NDX. NDX, similar type situation. NDX, we had a bearish engulfing yesterday. that basically covered the last two days prior. A gap down opened the day right to support at the 8-day moving average, and then a rebound. Now, what will be the significance of this rebound? How far is it going to rebound? So we've got a top, not a top, but a level of resistance now defined at the 53.57 level. We've got our initial level of support defined at about the 5,300 level. And if it breaks back down, closes below the 8, then that increases the probability that we're going to fall to the 20, which then if that bust and break, that increases the probability we'll fall to the 50. Right now, nothing on the charts are saying sell me, unless you're already long and you want to take some profits off the table. So we've gotten the same crosses on the TSI, same type of drop on the momentum. Similar situation, TSI on a weekly chart is continuing to push higher, although on all of these in both charts, the daily and the weekly, the TSI is pushing into what I'll define as nosebleed area, where it's tended to weaken in the past. Doesn't mean it can't push higher, but we may see a curtailment of the same pressure to move to the upside. And what I mean by that is that we may see either a slowing of the move up or actually a healthy pullback. And so right now, well, look for those pullbacks back into the support areas that we've defined here. We've got basically, the most significant one is down here at the 51.75 level, and a slight one that's here at the 52.94 level. Now the Russell, at least the Russell, as we looked at the chart last night of the Russell was looking like is the weakest of the two entities. As we can see, we basically, you put in a bearish Arami, followed by a nice down day that closed below the 8. Today we get to the 20, past resistance at the 1383 level, and bounce back up a little bit. However, we do have TSI on a daily basis drilled down, momentum on a daily basis turned down, and the momentum on the weekly basis never got in gear like it did for the for either the S&P and or the NASDAQ. Now, part of this may be also due to just the first three to 4 months of the year. The Russell tends to lag the other indexes. And we're approaching a time frame when we get into the latter part of March, so probably in another 5 weeks or so. Oftentimes the Russell will catch a bid and spring to the upside. We'll see. We're also watching very carefully to see how the indexes are playing out compared to their historical seasonality for a post-election year. And then, I am not basically placing my trades blindly expecting that, the seasonality to take place, but I'm watching to see if the seasonality does take place, and then we'll plan our strategies, plan our trades around that. Excuse me just a second. Needed some coffee. Okay. So as we see right now, what we may be getting here on the Russell, and we will keep our eye on it, is basically that would be a hammer at the end of a little short flag down to a level of support. If it breaks back above that, that may be an indication that we're going higher. Any kind of good news that would come into the market would definitely push it higher. I wouldn't say that the market right now is overly emotional. even though it was overbought, and this little pullback that we're seeing right here, maybe getting rid of some of that overbought naturally. And you can see that it is happening because the TSI has rolled over, momentum has rolled over. But remember, this zero line on both the TSI and the momentum on both the daily and weekly charts also can act as a level of support that will level of support or a floor where momentum can tend to bounce from those areas. So any questions on the markets, guys and ladies? Yeah, I don't know. Is it the State of the Union next week, Rick, or is it just President Trump is going to go and make a speech to both houses? Does anybody know? Okay. So somebody knows and they're just not telling us. But yeah, I know he's going to make a presentation or a speech on that. This has been one of the most interesting, last year was the most interesting presidential campaign that I've ever seen in my whole life. I won't say interesting in a good or bad way. And with the results being very interesting, February 28th, okay, that's next Tuesday. And then add to that, I've never seen, even when the White House changed party affiliation, I've never seen it acted out the way it's acting out now across the United States. I mean, it is, in some ways it's absolutely bizarre. But I've been around for a couple of years, and it's just, I'm just going, wow, that's a couple of ways it's bizarre, a couple of ways it's insane, a couple of ways it could wind up to be really, really good for the United States and its standing in the world. Well, we shall see, as I like to say, we shall see. Okay, I want to remind everybody, okay, my hypothesis right now is that, as you can see, this is the chart I've been watching, and this is typically, here's when the inauguration takes place, and you get a nice run-up into the first half of February. Well, this run-up has continued on up into almost the last part of February. And so will we go into the correction where we see that in these places that normally you get a correction in, which typically, February is typically a weak month. The blue line, as we've addressed before, is the retraction that tends to happen in a post-election year, going back 50 plus years. Will that in fact happen here? And will the retracement now, this time, be less than what you saw over here, because we're starting from a higher level? So we may want to just, what may take place is we could take this part of the chart from about there to there, and let me see if I can move this. I can, and just move it over to give us a new potential perspective of where things may go before it ricochets higher. But it tends to be from the month of March is kind of a sideways month, and then just prior to the 401 and tax time in April, excuse me, you get a kick up, which is typical almost every year. So we shall see. All I'm going to say, are you having fun? Is everybody excited? And So, yeah, Rick, it is interesting that Vice President Pence does have to explain what the parent president is doing, but that's not unusual. I mean, it's not like that hasn't been done by former vice presidents before. So path of least resistance, I'm looking at, should we make the vote for Mike since he's not here? Yep, he's not here, so we'll make the vote for Mike. Long term, Mike is in this camp over here. He might basically say that he would expect, potentially for the market to move sideways in the interim, but in the 2 to 3 to 4 year period, Mike believes there's going to be a significant major correction. At this point, we're not seeing any clues that that is what's going to happen. I'm more in the camp to basically saying, hey, we are in an uptrend. So what are we doing in an uptrend? Play the pullbacks until the pullbacks stop working. And how do we know when the pullbacks stop working? It's basically you'll get pullback, then you get a pullback, a drop, and then it'll come back up here, test in this past high area, drop back down, break that swing low, and then put us into a new trend to the downside. To what level? Don't know yet. But I can definitely see, and part of it's just a sense that rather than being like 2007, 2008 timeframe, it almost seems like it's more like the year 1999, 2000. Of course, that led to a much more significant correction, but it also at the end of that bear market provided some absolutely wonderful buying opportunities. So that's what I'm seeing is going on, folks. Okay, here's where we're sitting with the active trend trading system. We had a couple of really good trades that basically rebounded and took care of our losses we had at the beginning of the year from some of the entities we carried over from the end of the year. And then everything else is moving along nicely. Now that we've got a couple of months under our belt, I'll start showing this. This is basically the cash flow P&L, and this is reflective of the P&L here too. And so we have started to move up, and this is the projecting out that we're shooting for. In this case, since we started at a little bit higher level, we started with 116,000 for the year, which I'll have to change that before next week. We're anticipating a cash flow of over $40,000 for the year. We shall see how that goes, but we'll be tracking this against the P&L statement, anticipating and looking for it to zigzag on its way going up. We're about $2,300 short of where the projected target is for the month right now, but we'll see if we can keep this on a nice trajectory. I want to break out above this and then pull back and kind of zigzag our way up. But it's a really good reminder that with trading, you're not going to necessarily bring in a consistent, $1,000 a month kind of thing. You can set up trades that will enable you to kind of get into that kind of a mode. However, you're never sure it's going to be 100%. It's not like collecting a monthly paycheck, let's just say, and it's a lot more like a commission sales job. Is what I of course tell my wife. She's always asking me, well, are you making your commission for the month? But that's my lovely bride. And those of you who know her know that I'm a very lucky man to have somebody like Michelle, because she's put up with me now for almost, gosh, we're going into 43 years this year. That's almost a lifetime. Okay, so presentations coming up the 4th of March. If you're in the Bay Area, Lyle Wright, who knows a heck of a lot about sports psychology, has made the jump into applying some of the sports psychology stuff he works with on a day in and day out basis, adapting that to trading. you want to be, and the topic that he's going to be talking about is overcoming fear and other roadblocks in your trading. So that's going to be at the Masonic Temple in San Jose on the 4th. I'll be plugging into that meeting remotely to provide some stock opportunities and this type of things. This coming Wednesday night, we're going to talk about updates to the early warning alerts. If you're an early warning alert person, you'll get an invite to that live presentation. Some of the other things that we've been working on and have got put in place is basically the refinements to the early warning alert services. I can take out the prepping, but still working on a lot of stuff. I have my son Brandon, who will be, who's a real computer whiz. He will be consolidating and basically putting together the the past training webinars and categorizing them into active trend trading, technical analysis training, so that a person can come in on the one page for the training videos and select exactly where they want to go and hopefully make it a little bit more efficient with the training areas. We have started the live Facebook market updates and tech tips. If you want to get a forewarning of when those are going to come out, just go to Facebook /active trend trading and follow us there, and then you will get an alert if you're on Facebook when we're going to go with a live presentation. I hope you are taking advantage of those. Final hour setups, of course, and one of the things that I'm going to get going. Do you have questions about trading or related to trading, related to technical analysis, related to our watch list, something like that? If you do, please send me a question. What trading questions do you have? Send it to me at my email address, or you can leave it, just leave a comment on either the Facebook page, the Twitter page, or the active trend trading page. But email would be the best, because at least I will get those and I review those on a regular basis. And then once a week I'm going to be taking those questions and finding one question, and I will address whatever that particular question is. Whether, like it may be, what's the best entry? And then I'll put together a little 10 or 15 minute presentation that addresses and answers that question, and that'll be provided then to everybody. And so if you do, please send me an email, and it's dww@activetrendtrading.com. I want to remind everybody that our active trend trading system is based on the 5 pillars of active trend trading, which is inclusive of what to trade. We only trade top quality IBD growth stocks and or top-notch ETFs, when to enter, when to exit, what strategy we're going to use, and what we expect to happen. But you take all those 5 pillars and it basically boils down to this: the reality of trend trading. 1, know the trend. 2, define the area of interest where you want to take action to enter a trade. And then 3, define your trigger, define your strategy, and define your targets. And remember, we only control 2 points in every trade: when we enter and when we exit. What takes place in between those points in time, we literally have no control over. Even though the probabilities are in our favor, probabilities don't always work out. Just sitting there looking at what Nugget's doing. So our strategy number three, wealth and income. Here's the current gains on it for the year on each one of the entities that we have. The net for 2017 with this particular strategy, we're trading Spiders, Nugget, and Tesla. So that's basically all I have for today. Boy, I really cut this down and keep it short. But any questions out there? Any stocks you want us to look at? So 2016, keep the egg growing. trade wisely, trade profitably. If you want to get special notifications from either Facebook or if you're a Twitter person and you like to tweet, I do enter notifications on Twitter. I don't necessarily cover the trades, but I highlight and send out notifications of when something's happened with the rest of the services. So premium members will be starting the final hour in about 15 minutes. And last but not least, oops, let's go back here, and I'll just leave this up for a second, is if you are attending, if you're not a premium member of the Active Trend Trading service, you can take advantage of the Friday week webinar special, 40% off the regular monthly price. And if you want the active trend, the early warning alerts that we'll be covering on Wednesday night, you can jump in here at quite a savings from what the regular price of that is. So with that, if you have okay, so any let's take a look at some stocks that you may have. Rick asks the question, does the late earnings report generally mean the report will be negative? What do you mean late, Rick? Okay. Was it 1 month late? Did they push it out? I was not aware that they had done that. If they have to modify their date when they're going to be, putting out their report, if it's news that they're, having to push out the date, that can sometimes be an indication that, hey, something's funky going on, but not necessarily a. It's just something to be aware of. IDCC is a good place to start, Rick. Thanks for bringing that up. IDCC, those of you who traded it with the active trend trading, basically it bounced along here. It had basically come up. We got a TSI tick up down here. It ripped up to past resistance, just above past resistance, 92.20 level. Got into a trade about 92.50. Took off part of it when it came up here and hit this high about 95, and then held on to the second half of the trade until it basically the day before earnings, because it reported earnings on the morning of the 23rd. Well, because I did not have 10% profit in this, we only had about 8.5 to 9%. I said, I'm not going to hold. And that's just one of the rules that I have. And so at the close, 10 minutes before the close, we sold our position for about $100.95. So we made from $92.50 up to $100.95, which is a nice gain. And let me tell you, after the next morning, as the pre-market with the pre-market showing, oh, guess what? It didn't like it, and so wham, it got whacked. Now, will it come back? I don't know, but it has fallen off the IBD 50, and so we're looking to add some additionals on that. Similar. So, do you guys have any stocks you want to take a look at? Similar thing happened with, of course, Tesla. We were not long Tesla, but we had done our strategy 2 on Tesla on just before the close on the day of earnings, and basically got into this, and both of those sides of that trade have been successful. We had sold the 290 call and sold the 255 put, and you should be able to close the 255 put out today. And let's see, let me take a look and see if that in fact did close. I sent out an alert this morning for premium members. Yeah, it looks like it has not totally closed yet, but it's close. But I said, you know, put a stop loss on it at $2. And this is one of the reasons why I like to do 2 contracts. I put the stop loss on one side, you know, one of them, held on to the other, so I got stopped out on one of them for $2, and the other one I'm holding, and it looks like it's going to come closer to, you know, I'm buying it back for a dime. We'd sold those for $2.20. So PI, Joe, like, what is PI? Okay, not familiar with this entity. Joe, what do they do? Okay, let's take a look at this really quick on what's going on. There's a daily chart up here. Where are the? Okay, it is an IPO, I believe. We'll find out here. Yep, it's an IPO. Came open back on July of last year. It looks kind of interesting, Joe, from a weekly chart, because you're hitting there, coming down, hitting off of what would be the 200-day moving average, and which is the 40-week moving average here. So we know we got some support down here at about 28.63, 28.30-ish. But we have dropped. We've had a bearish cross of the 820, and now a bearish cross of the 20 over the 50, and we are hanging out below the 100-day moving average, but we are hanging out at a level of support. And this was definitely, this drop was earnings related. So what I would do is I would run the market checkup on this. In fact, I'm going to make a note on it right now. I would run a market check on it, see what kind of fundamentals it has, and if it has strong enough fundamentals, that would be interesting. It has okay volume. It's got average volume about 795,000 shares per day, and so just taking a real quick look at it and just covering a couple of other things is, one, we've got a series of lower lows, lower highs, tested that, tested it again, and now has reversed back, taken out this swing high here, and now is in the process of putting in what would be considered a lower low. So from a weekly, daily basis, it looks like it's going into a at least a channel down. Earnings were excellent, but guidance for the first quarter missed. Guidance for the next year are excellent. Okay, yeah, I'll take a look at that a little bit later on. What industry are they in? Chips, like Chips Ahoy. Yeah, a couple of chip shops got whacked this week. NVDA got whacked. But watch it. It was downgraded big, downgraded down to like $85. So keep your eye also on two of the FANG stocks. They seem to be making a little bit of a comeback. One of those is the FANG stocks, of course, are Facebook. A is for Amazon. N is for Netflix, and G is for Google. Now Alphabet, but they're not going to have it be the FANA stocks, and so it would still be the FANG stock. Facebook is hanging in there pretty good, even though the market may be softening. And the other one that is very interesting that I kind of like is Netflix. I realize they don't quite have the same oomph from a fundamental standpoint as they used to. Okay, Morgan Stanley just initiated coverage on PI with an overweight. Yeah, I'll run it through the stock checkup on IBD web page and just see what it looks like from a fundamental standpoint. So yeah, Netflix is, like I said, just looking kind of interesting for a lot of different reasons. It came out of this kind of big, huge cup with a little bitty handle, and then I was rebounded above that, and is in the process. Got really good support down there about 139. We actually initiated a position in this week. Picked up the 140 calls that were going to expire on 17th of March. And so we'll see how those trade up going from here. So, okay, my friends, I'm going to call it a day for today and get ready for the next webinar. I got time to look at one more stock if anybody has anything. Okay. Well, please remember, if you have a question, I will look at Momojo. If you have any stock trading related question, please send an email, and I will choose from within those questions and put together a training bonus training webinar video, and then provide that to everybody. Because if you have a question, 9 times out of 10, it's going to be a similar question that somebody else has at the same time or has had. And so this looks actually interesting. What's it done? And for a couple of reasons. One, let's look at some symmetry real quick here. We've got symmetry going on, let's say from here to here. And then we can move that, activate it. So we hit similar symmetry from here to here. Isn't that interesting how that symmetry works? Now we're getting a pullback. We can also, are we getting symmetry from here to here on the pullback? And I would say, yeah, just about. And so, looks kind of interesting. I would like to see, of course, the TSI tick up. That doesn't mean a cross, but that means for it to stop going down and actually, reverse, to give us an early clue of getting in. Although you may go to the intraday chart on an hourly chart and find that that has in fact happened. We're still above the 0 line, and all the moving averages are pointing up, and it's where it found support before. Oftentimes these entities will find support where it found support before. This would be the second pullback to the 20. Where might it go from here? Well, if that did turn out to be a point of interest, we can just activate that, move this line on up, and please bear with me, these are only estimations, and so that would give us a point, for that particular run, if it maintains symmetry of running from about 25 up to approximately, let's say 30 to 31, and that turns out to be about a 24% gain. So yeah, well worth watching. I know Momo didn't, I think it came out on the IBD 50. It did not make it through my strong stock sort last week, but it is something to keep your eye on. It's got earnings coming up on 3.7 BMO, which means if you do get into this and you're not up 10%, you would want to sell it on 3.6. And which you couldn't do because 3.6 is on, yeah, you could, it's on Monday. You got Saturday, because Saturday's the 4th, 5th, Monday's the 6th. So, okay, guys, I'm going to call it a day, and thanks for joining us, and have an excellent weekend, and if you're in California, stay dry. God bless everybody.